Okay, why don't we get started here? First, I want to thank everyone for joining us today. I'm very excited to be here with you as we journey through our first time homebuyer seminar. Our partnership with Members Mortgage has allowed us to provide members with the best home buying experience possible, at least from a lending perspective. Members Mortgage Company was founded in 1994 as a credit union-centric mortgage company. Over the years, Members Mortgage continues to work exclusively with credit union partners. They offer mortgage expertise and world-class customer service. Now, let me tell you a secret why we like Members Mortgage. Unlike many other lenders, they connect every applicant with a mortgage expert who is the key person tasked with making the lending decision on an application. This cuts down significantly on time, miscommunication, and the collection of needless documents. Their mortgage experts will guide applicants from the start of the application straight through the closing, and I'm sure they're doing it with a smile. Now that I've spilled the beans on our secret, let me introduce you to the team. Taking the lead today, we have the knowledgeable Joseph Zampatella. Joe Zampatella is joining us from Members Mortgage. He's here today to give us his full insight on the mortgage process, rate trends, and some other useful tips that will help you be successful in this highly competitive market. Joe is the Executive Vice President of Mortgage Lending at Members Mortgage Company. He oversees the overall mortgage production from the first day you apply straight through to the closing of your loan. He is licensed to lend over New England, all over New England actually, and Florida. He is responsible for closing $1.3 billion in credit union mortgages. He's done this over the last 2 years, not just the lifetime of his experience. We also have David Golas here with us today. He is the president of Golas Golas and Golas PC. He has been practicing law for 26 years. He works with his father, who established the firm over 60 years ago in Manchester, Connecticut, which is my hometown, so I like that. He also has the honor of working alongside with his brother. David primarily handles residential refinances and home purchases. His firm has a long-standing relationship with Members Mortgage and handles most of the closings in Connecticut. Our final panelist is Blanca Escobar. She is an insurance agent with Liberty Mutual Insurance. She has worked diligently over the last 3 years to help her clients find the right coverage to fit their needs. With her wealth of insurance knowledge, she is often referred to as the one-stop shop. She has experience with insuring homes, condos, apartments, you name it. So you guys are in good hands today. I want to thank you again for joining us. And without further delay, Joe, the floor is yours.
Thank you, Octavia. I very much appreciate that introduction. Thank you again, Joe Zampatella from Members Mortgage. And I just kind of want to thank all of you for spending your afternoon/night with us to talk about jumping into this crazy market that we're in right now. Basically, we're looking at one of the tightest inventory markets of all time. So there are very, very few homes to buy. There are more people trying to be pre-qualified now to buy a home than ever before. So applications are rampant, which just means that the competition for every home that comes for sale is going to be fierce. You're going to have very, very few homes that are going to be sold under asking price, and you're going to have multiple bid situations on pretty much every listing that comes to market. This isn't unique to Connecticut. It's unique to basically the entire country right now. And I can kind of give you a little bit of commentary on interest rates and then why this kind of faction of the market has started. Right now, today, we hit the highest interest rate that we've had in 13 years. In the beginning of 2022, my market 30-year fixed mortgage was at 3%. Right? This morning, we published a rate of 5%, which effectively changes your monthly mortgage payment by over $487 a month. Okay, so over the last 3-4 months, people have lost almost $500 a month in buying power. Now, you'd think that that would slow down the market, that would create some sort of systemic instability that may drive property values down. Now, the difficulty that we're seeing here is that the cost to appreciably, increase your home, right? More bedrooms, more bathrooms, more square footage is so high right now that very many people are either remodeling their homes or they're just locked into such a low rate from refinancing that the economics of of buying a new property just becomes unfeasible. So there are so few people looking to sell and so many people looking to buy that the interest rates really haven't factored into the just basic supply and demand in the market. Economics always drives all of the business decisions in this country. So you're going to see, low sellers, high buyers means appreciating values. And we're seeing rapidly appreciating values to the tune of somewhere around 20 to 30% for the last year and a half, which, I mean, listen, everybody wants their home to appreciate. 20 to 30% is a very rapid appreciation for something as much of a utility as a home, right? If your home depreciates by a couple percent over a few years, not a big deal because you still get to live in it. You don't really factor it into it as an investment. But if you look at the overall wealth of people in the United States, homeowners value appreciates at over $1 million over a lifespan versus people who rent. So it's certainly becoming a significant part of somebody's investment portfolio and really driving wealth in this country. So one, rates are high, inventories are low, and wealth is being built every day. So if you own a home, congratulations. If you're a renter, for the last 5 years, you've probably been looking at this market going, oh, we've hit the top, we've hit the top, we've hit the top. And I've said that myself. And the reality is that even as rates climb, pricing is becoming more and more ridiculous as the days go on. And I don't see it slowing down anytime soon. Okay? So right now with COVID still going on, people are really kind of developing their model from working in city centers to working from home. Now, that's not necessarily a good thing for the housing market because people are, again, there's more drive to get out of those starter homes and get into more of a family home. And when you start doing that, it puts even more pressure on buying that family home. But what happens to all those starter homes, right? The small ranches, things like that. There are developers who are cash buyers coming in, buying it. And this market has been described as the death of the starter home. Basically they're tearing down small starter homes that are in the affordable bracket, and they're building these larger homes that are appreciating as they go, right? So you're seeing very, very few opportunities to kind of get your foot in the door, which means that you're really going to have to compete on every listing that comes for sale to make it easier for the seller to accept your bid. If you're one of those people that thinks you can sit and kind of bid at the asking price, or you might get an opportunity to buy like a short sale or foreclosure or something like that, this isn't that kind of market. And it hasn't been for probably about 2.5 years. So I would anticipate that if you're going to be moving on this, you're going to have to move fast and you're going to have to be willing to pay at least the asking price on a home. Okay. So let's kind of talk about the requirements of buying a home. Everybody says they want to do it, but what is it that you need to do in order to be pre-qualified for a mortgage? So for the most part, everybody who's a first-time home buyer is going to be looking at single families and condos. So most of my information is going to be directed at that. I can also go into multifamily properties if people have interest, if we have time. But on single family homes and condos, the minimum down payment is going to be 3% of the purchase price. Okay. And that's if you're a first time home buyer. And that's through Fannie Mae's home buying programs. So that is the minimum in all of the markets. So a lot of people call me and go, oh, I'm a first time home buyer. I need an FHA loan or I need a VA loan. The lowest down payment required is going to be 3% across all of those programs. So this is typically where most first time home buyers have the best opportunity to secure typical financing. If you've already owned a home in the last 3 years, but you're looking to buy again, the minimum down payment is going to be 5%. Okay. The minimum credit score, a lot of people ask me this, what's the minimum credit score? My credit's not great. I have 660. That's totally fine. The minimum credit score for conventional financing is 620. Okay. And they actually just changed these rules in the last 6 months. Before, it used to be a hard line at 620. If either borrower had a credit score below 620, your loan was not eligible. They've actually changed it so that if one of the two borrowers is below 620, they average the credit scores. And if that average credit score is over 620, your loan can still be approved and be able to fall into the conventional spectrum. Before, you'd only be able to go with the FHA or VA programs, but now the conventional programs will allow that as well. All right. Now, a lot of people say to me, well, Joe, I thought the minimum down payment for conventional financing was 20%. What happened with that? And basically, a lot of people hear the word mortgage insurance and go, oh, no, I don't want to get involved with mortgage insurance. But mortgage insurance is something that protects the investor of your mortgage if you have less than 20% down. Now, with FHA, VA, if you take out a mortgage, you have to pay mortgage insurance for the life of the loan, regardless of what your down payment is. Now, with conventional financing, if you have less than 20% down when you buy the property, you're going to have mortgage insurance for a little while. But when you pay that mortgage down to 78% of the original purchase price, that MI premium will automatically drop off of your payment. So you're not going to be paying the extra fee for the life of your loan. You don't need to refinance. It will just automatically drop off of your mortgage payment once you pay it down to that certain balance. And what I've found, especially recently, delinquencies are low, foreclosures are low. So the mortgage insurance companies are getting more and more competitive on their rates and terms. So if you have good credit, the premium is usually $60 or $70 a month. It's not something that's going to really materially change your monthly payment. The interest rate hike is much more impactful than having an MI premium. So if you don't have that full 20% when you're looking to buy, that's not a problem. You can go again with as little as 3% down. Okay. So let's talk about your competition. Right? You've obviously made the decision that you're going to buy a home and you're ready to do it. Now, this market, you're looking at 22 to 38-year-olds as first-time home buyers. They're all tech savvy. All right. So they're using apps like Zillow and Redfin and Trulia, and they're getting MLS listings immediately. They're working with real estate brokers who are, working their inner channels to try to get opportunities. These people are very competitive and they use the resources very well. If you're somebody who thinks that you can kind of browse over the listings as they come on and make a decision in a week or two, this is going to be a very difficult market for you. What I've found is that they kind of all go under this pattern. Right? On Thursdays, you're going to get notifications of listings. Okay. So on Thursday, they say, these are the homes that are coming for sale. Sometimes it's Wednesday if they try to jump the market. Sometimes it's, a Friday afternoon or something like that if they want to let the initial noise go through. But it's somewhere in the end of the week, you're going to get notification. Then Saturday and Sunday, they're going to do open houses where you can go in, see it, walk in with your realtor, talk to them about it. And then by Tuesday at noon, they're calling for offers. Right? So they're anticipating they're going to have multiple bids. They're saying you have to get your bid in by Tuesday. And then by Wednesday, the home's under contract and it's gone. It's been like that probably for about 2 years. Again, since COVID hit, homes have become such a valuable asset that if anything of value that's in kind of a relatively close price range, it's gone within a week. So doing your analysis and doing your due diligence on homes has become very, very difficult. When you make a bid on a property, it's, when you write the contract, there are different things you put in there that will allow you to get out of the transaction, and they're called contingencies. Okay, so a lot of people will do a financing contingency. They'll put an inspection contingency. They'll do radon testing or things like that in their offer. And in the past, that was totally typical, and you have home inspections and you'd be able to get financing. In this market, a lot of sellers are fighting back against contingencies. So a lot of these bids are represented as cash and they're coming in with no contingencies, which means if they accept your offer, you have to go through whether you can get financing or not, whether you find something wrong with the property when you walk through or not. And again, that is a very, very real market. And it is very difficult for first-time home buyers, especially when, you may not necessarily be the handiest of people. So walking through, you want the inspection, you want to be able to determine the condition of the roof or the condition of the foundation, the boiler. Unfortunately, a lot of people are being forced to waive that in this market, and it's very, very difficult for first-time home buyers. Okay, so you've made the decision to get into this market. It's like jumping on a treadmill, right? It's going full speed, and you're running as fast as you can. But what I want you to understand is that you need to have certain people with you well ahead of your opportunity to find and buy a home. Okay, so the first thing you're really going to want to do when you're starting to look at your properties is to find a real estate broker. Okay, you don't want to find somebody that is an aunt or cousin or somebody's friend's parent or friend's aunt or friend's friend. You want to find somebody who's dedicated to the business. Okay, you want somebody in the market that you're looking in who has inroads, who has an established business that has dedicated themselves to this process, because those are the people that are going to get you opportunities ahead of listing, right? Before the general public, that you may be able to come in and sweep in and get a property under agreement before it ever has that multiple bid situation, before it ever gets to the bids due at noon. So when you get that person, they're going to be somebody who guides you through the practices in the town. They're going to be able to guide you through the areas. They're going to be able to tell you, do the basements flood in this neighborhood? Is this a high traffic area during school time? Is this someplace that, the bus drives by every day at noon so your kid gets woken up from their nap? You want to make sure that you understand that person and that they're able to kind of guide you through this process. They're going to be the most important person when you're trying to find the home. Listen, I'm the lender, right? I get you the money to buy the home, but I can't tell you the nuances of every home that comes for sale. So what you need to do is find somebody who's going to be able to guide you through that process. Okay. The next person, once you find the home, is you're going to need a real estate attorney. Okay. We're lucky enough to have Dave Golas here from Golas Golas and Golas PC. And I'm going to turn it over to him to kind of talk about his role in this transaction.
Thanks, Joe. Welcome. Just to reiterate, my office is in Manchester, Connecticut. I have a longstanding relationship with Joe and Members Mortgage, and I've closed over many years. We closed a lot of loans, but the last 2 years has been incredible with the amount of loans that we've closed. And to reiterate the market out there today, I got a call from a prospective client. I talked to her on the phone. She said, I want you to be my lawyer for my house purchase. I said, okay, great. Can you send over your real estate contract? She said, oh, we don't have one signed yet. We're one of 12 offers that are into the seller, and hopefully they'll pick our contract. And I said, okay, hopefully that's the case, or you'll find she has other properties she's looking at, but literally 12, and she was already calling me, which was nice. But it's really crazy and competitive out there. That's not to discourage you. My role in the process, sometimes after you have a real estate agent and you are lucky enough to get a contract signed, sometimes people have me review. There is a contingency where attorney review. I would review a contract, but most of the time you've already have the signed contract, you have a deal. It's in Joe or Joe's loan officer's hands. They eventually will send me a file that says they have a loan that's going to be for a purchase. And from that point, I start my file, I call you, introduce myself. And basically from that point on, in Connecticut, the rule is, it may be different in other states, when there's an issuance of a title policy, and I'll talk about that briefly, there's a requirement that an attorney handle a closing and issue a title policy. So almost all of the time when there's a purchase, there's always a lawyer that represents the buyer, you, and also the lender. And most of the time, you're able to pick your own lawyer, but most of the time it works out that Members Mortgage recommends my services. Hopefully after talking with you, you decide to go with me. It is a streamlined system. When I work with Members Mortgage, 'cause I've been doing it so long, they know what I do, I know what they do, and we move your file along as fast as possible to close on the closing date or earlier if that's possible. You do not, and it's actually the most financially, I don't want to say cheapest, but it's the cheapest version to use me. My fees are set through Members Mortgage, and I don't charge anything extra for copies, or you never get charged for anything else. It's just the set fee. And you are able to choose, in some circumstances, people do want to use their own attorney, even if you are using Members Mortgage. And in that case, I kind of oversee the closing. I'm still involved because I'm helping make sure that all the paper, the documents are correct for Members Mortgage, and you have your own attorney who handles the closing and represents you. But most of the time, people choose just to use my office. The closing would be at my office. It would be here in Manchester, and we work with the sellers and the buyers to complete the closing and the closing date. The title, one of the most important things that we do is we do a title search. So in Connecticut, almost every single town hall, every town has a town hall where all the land records are. And from the beginning, when there was a first farmland and the houses began to be developed, there's a record of the owner and any mortgages and liens and things of that nature. So when you have a contract, we search the sellers, the people selling to you. We search the title in the town hall. We produce a report that goes to Members Mortgage and ensures that there is no issues with any kind of lawsuits. All the mortgages that are currently on there for the sellers will be paid off at your closing. There's no tax liens. Sometimes people have problems paying bills and there's liens on there, it's all clean so that when you purchase your home, you don't have to worry about any of that. That's all taken care of. So that's one of the most important things that happens. And in conjunction with that, lenders and members mortgage requires a title insurance policy that basically goes to them that says since the beginning of time until the day that you bought it, there's no outstanding issues that would ever come in between the payment of their loan or anything like that. And you typically would be also offered an owner, it's called an owner policy. So for usually a few $100 more, you get a policy that protects yourself so that as long as you own that home, if anything ever comes up, there's a defect in title, an old lien or mortgage or anything on there, that you're protected and you would actually get your purchase price plus inflation. So it's typically a no-brainer to purchase the owner title insurance policy. One of the things that my office also does, and my office it's Golas, Golas, and Golas. We weren't smart enough to just say that the Golas law firm. That's how it's my dad, myself, and my brother. And we're really a family law firm. If it's not a family member that you would talk to, it would be a staff member who is like family. And typically, it's not uncommon for me to see a name pop up and I answer the phone. So if you are going through Members Mortgage in Dutch Point, you can call me. I'm here. It's my office. I'm always here. So I think that's some form of comfort. I even deal with law offices and I never get to talk to the lawyer that I'm dealing with. I deal with a paralegal, but you would be talking directly with me. And I know every file that goes through Members Mortgage in Dutch Point personally because I handle the file. One of the other things, and I'll be brief, that is when you get your loan estimate from Joe, his loan officers, they do a good job of estimating all of your fees and things of that nature. And there's a lot that are fixed that don't change. And then in each town, there's real estate taxes. So it depends on the certain town. Most towns, your taxes are paid 6 months in July and January. Some towns are one time a year, sometimes they're 4. But when you have your contract, you have your loan estimate from Joe. A lot of times when it's a first-time home buyer, which you would be, I would people call my office and I actually go through the details to figure out what town it is. I would ask them, do you have oil at this house that you're going to buy? Because that would be an added expense. Propane, how the taxes are adjusted, because a lot of times the nuances of the particular house that's in the particular town may have it's not a ton of money, but it could add up to a few $1,000s. Oil right now, I just got dropped oil for $900 in my house. So if your seller had just topped off the tank and they're selling it to you the next day, that's not going to be on Joe's estimate. It's going to be $900 that you're going to have to come up with. So a lot of times I like to do a sample. I take Joe's preliminary disclosure. I put in all the figures that I would have that would be particular to your home that you're going to buy. So you can see that way in advance. So you know there might be a couple extra things so you don't worry about it the day before the closing. And basically before the closing with Joe and his team, we have usually try to do a week. Sometimes, Joe, I don't know, we squeeze it in there. You're supposed to get your final figure for how much that you have to bring. We try to do it a week in advance so that you know you can prepare your funds and you bring a bank check basically to my office and everything is handled here. And hopefully you have a home. And sometimes also I would help with if the day you buy your house, hopefully I haven't had to happen in a while. If people leave stuff in the house, there's things that I handle that are not just paperwork. I have to figure out how to get if the refrigerator is not working, there's a lot of little things. You can rely on me to do all of that. And hopefully you have your house and you're there for a long time. So without saying anything else, I'd be happy if any of you after this week or whatever wanted to call and talk more, you certainly can get my number and call me. I'll be happy to talk to you. Thank you.
All right. Thanks, Dave. And so as we've gone through this, right, we've established you need a real estate broker. You're going to want to work with somebody who intimately knows your file like Dave Golas. But then we're going to get to the most important, the star of the show, right, is you need to find a good lender. Right? And that's going to be really the most important part of making your bid. I mean, everybody knows whoever bids the most is most likely going to get that house under contract. But when people are bidding on properties, right, it's almost like they're cheating off of each other's homework. If a house comes for sale for $300,000, right, people tend to bid in price bands. So those price bands usually go in $5,000, $10,000, $15,000 bands. And so you'll get 3 or 4 bids at 305, 310, 315, 320. And what ends up happening is that the seller is seeing so many opportunities that are all basically the same that they have to find a different way to differentiate between those people. Now, in a bid, there's only so much that they can read on paper. You can write them a nice note or something like that, but the numbers are all going to kind of jive similar to what they're seeing. So you have to be able to differentiate yourself. And one way you can do that is through choosing a lender. Bank of America, Wells, Chase, these guys are large consumer lending institutions that have national presence, and they do a lot of things very well. Lending is not one of them, right? You cannot be an expert in every single market in the United States. It's impossible. What Members Mortgage has done is we've targeted very specific areas and we've become experts in them. So specifically, Hartford, New Haven, Connecticut, and Boston, Massachusetts. And that's really our main areas of business. And we develop relationships with people like Dave Golas, who is a lifer in the credit union industry and understands that Hartford area in Manchester better than anybody else. And he knows how to take care of people, right? So that's what Members Mortgage is the same way. We are not looking at you as another file. We understand the credit unions are member-centric organizations. So as much as we know mortgages, we know people better, right? So the first thing you're going to want to do before the home gets listed for sale, before you find that home of your dream, is you're going to need to go out and get pre-approved, okay? Because again, the market moves so quickly that if you see the home, by the time you go out, get pre-approved and have a letter and you're ready to submit a bid, the home's most likely already going to be gone. So what I would suggest is 24 hours a day, right on the Dutch Point website, you can go out and apply for a mortgage. And I'm going to share my screen with you so you can see it. Okay, so this is just a trending graph of U.S. rates, right? The U.S. 10-year Treasury is what mortgage rates tend to track off of. And you can see since the beginning of 2022, how aggressively steep that rate has climbed. Okay, so that, again, just makes the market more competitive. So what you're going to want to do is 24 hours a day, go right to the dutchpoint.org. You're going to go borrowing mortgages. And then you're going to see a little apply now button. Click on apply now, and they're going to say, yep, you're going to Members Mortgage's website. Hit continue, and here you go. This is a website that is a shared platform between Dutch Point Credit Union and myself. It's actually the same technology that Wells Fargo uses. So it's top of the line mortgage processing technology. You have rate trackers, you have closing cost estimators. They have little sections for first time home buyers and different checklists that you should have for buying a home or refinancing a property, your homeowner's insurance, your disclosures. There's all sorts of different tidbits that you can learn just by browsing on this site. What I would suggest is, even if you don't plan on buying for the next 6 months, is to go out here and click apply. All right. And once you start that application, your loan, within 24 hours, you're going to be contacted by one of my licensed loan officers. Okay. And when you get contacted by my loan officer, they're not just a typical salesperson, right? The way I like to equate it is like everybody's gone and bought a car, right? And when you go into the dealership buying a car, you're going to talk to that salesperson up front that's going to promise you the world. But then when you get down to negotiating the actual cost of the car, that person's going to go in the back and talk to the manager. They're going to come back and they're going to have another conversation. Then they're going to go back and talk to the manager and then come back and talk to you. Typical mortgage origination companies, that's what they do. They have an originator that talks to the person day one and promises them that everything's going to go smoothly and everything's going to be simple. They're going to ask you for every document that they could possibly ask for. And then they submit it to the underwriter, right? The Wizard of Oz in the background, who goes through all of your paperwork and goes, I don't like this, get more. I don't like this, get more. We've cut that initial person out of the conversation and you just talk directly with the underwriter. So what that allows you to do is, one, from the first day that you apply, you have a mortgage expert who's guiding you on what you should do to put yourself in the best position to be successful from a approval standpoint. But it also gives you the flexibility of knowing that this person's the one tasked with signing off on the approval of your application. Okay, so if they tell you to do something and you do it, you're going to be approved. And that gives you such a significant advantage over the Bank of America pre-approval, where they have no idea who you are, right? It could take 6 or 8 weeks before anybody even looks at your application. For us, you're actually talking to the decision maker the first day. Even if you don't complete the application, they'll actually call you or send you an email and get all that information completed for you. And you've connected with them from day one. And this helps you and the reason I tell you do it quickly is because it allows you to have a snapshot of where you stand in time. So if you apply today and you want to make a bid tomorrow, if there's something wrong with your credit report, or if there's something that you could do that would put you in a better situation to get a lower rate or better terms, you don't have enough time to really allow that to cycle through your credit systems or to take effect. Whereas if you apply 2 or 3 months before you're really seriously looking to buy, it gives you that opportunity to pay down some credit cards or pay off a car loan or find a cosigner or something like that that may allow you to be more competitive when that house of your dream comes on the market. And because all of you have actually come in here tonight, I'm going to give you a promo code. Usually after you hit apply now, it's going to take you to a site where you put in your name and your birthday and your social security number, and you're going to authorize a credit report. And when we order that credit report, we usually charge $15 at that point. In this case, we're actually going to give everybody here a promo code, and I'm going to type it right into the chat box, and it's case sensitive. It says loan 4, LOAN, and the number 4, all in lowercase letters. And that will actually bypass the $15 credit report fee, which means you can apply, get your credit run, establish a pre-approval application with no out-of-pocket expense. Okay. And again, that gets you assigned to a loan officer, a loan expert who can review your application. It gets you somebody that you can bounce your questions off of. And obviously, I'm going to, at the end of this, I'll put my contact information in here. You're always welcome to reach out to me with your specific questions. But if anybody has any general questions now, please use the Q&A or the chat function, and we'll be sure to kind of address them. So when you go through this process, there's going to be a lot of things on there that you may not necessarily know, right? It's going to ask you what town you're looking to buy in, what the purchase price of the property is, what you want to do for a down payment, all sorts of different factors that, again, this is the first time that you're filling this out. You may not know even remotely close to what that's going to be. What I would typically advise you to do is just kind of look at the high end of your budget, right? If you're looking in houses from 200 to 250, put 250 in there, because it's not going to say yes or no, right? It's not a binary system. What it is it sets up an initial framework that I can work in that allows me to see your credentials. And then from there, if you're well qualified and everything's fine, it actually has the ability to instantly approve your loan and issue a pre-approval. If for whatever reason you don't qualify under some specific characteristic, your loan officer will be able to discuss that with you. And maybe you have to lower your loan. Maybe you have to pay down a credit card or pay off a car loan or something like that. But we can kind of tell you what you need to do to get approved for a loan of that size, or what your actual purchase range is. A lot of people call and they say, Joe, what's the absolute most that I could be approved for? And the reality is it's not a science. It's more of an art. There's a lot of factors that go into the approval, right? So like every home has a different real estate tax bill, right? So I don't necessarily know exactly what your tax liability is going to be. So all of those different factors are going to go into the actual underwriting of the loan. So what we'll do is we'll run it through that system. We'll take a look at your snapshot. And if any of your barriers, if any of your information is close to a barrier that would make your loan ineligible, we're going to verify that information day one so that you feel confident that when you find that home, you're approved. You don't have to have any hesitation. Whereas a lot of people, Bank of America, you can call and get a pre-approval in 5 minutes, but they're not going to run your credit. They're not going to do any of this analysis up front. And when you do that, you're going to end up in a situation where when you actually go to get the loan, that's when they're going to discover these issues, and you're going to have a tumultuous time getting the approval and getting the loan funded. Whereas with us, again, we want to address it day one, make sure that everything is all set, so that when you do find that house and you miraculously get it under contract, you're able to get to the closing table. Okay. And then again, credit unions are consumer-centric institutions. Right? You are a person here. You can hold me accountable through the Dutch Point Credit Union. If you go to Bank of America and they stop answering your emails, or they're not answering your realtor's phone calls, I mean, there's not too many people that you can call. Right? You're at Chase, you can't call Jamie Dimon. He's not going to answer the phone. I'll always answer the phone. I'll always answer emails. My wife's going to kill me one of these days because I walk around and check my email so often on my phone. It's something that, especially in a high pressure situation of buying a home, you have to have somebody that's on the other side that is equally as committed to getting you that property. Okay. All right, so we've gone over this. All right. So I just want to go over a couple things that are going to allow you to stand out in a competitive situation, right? So you've got your pre-approval, you've got your loan officer. Again, financing is going to be a part of being an accepted bid, but it may not necessarily be the most exciting thing from a seller to review. They really want to see the numbers, right? Everybody knows 95% of the time, the highest bid is going to win. But in a situation when there's a lot of people bidding in those price bands, how do you stand out? Okay. One of them, and it's amazing how many times this has worked, bid in odd numbers, right? So if everybody's bidding 300, 305, 310, bid 312, 300, 312, 100, right? It's just an odd number, and $1,200 might be the difference between you getting that house under contract and you not. If everybody's bidding in those bands and you're $500, $600 over, 310, 600, that might be the differentiating factor where they don't come back to everybody for best and final. They don't, push everybody a little bit further. And in the scope of things, your down payment requirement might be 20 or 30 extra dollars. Your monthly payment might change by $8 a month, $3 a month, very insignificant amount, but you won that bid because of the small differentiation between everybody else that's bidding. Okay. The next, and this one I can't stress enough, flexible closing dates. Some people think that when they're bidding, the shortest timeline is always the best timeline. That's not necessarily true, right? There's going to be the people who have a new job in Colorado and they've already moved out there and they want to close as quickly as possible. That's always going to be a scenario. And in that case, we've closed loans in as little as 16 days. I usually tell people to close it in 30. And 30 is very, very manageable. It's not an issue, but we've closed them very, very quickly. But every so often, you're going to run into somebody like a Mrs. Rappalucci that's been there for 65 years. Okay. And that person cannot get out of her home in 30 days. She may not be able to get out of her home in 90 days. So what I typically tell people to do is, especially when they're making an initial offer, is to go with closing in 30 to 90 days at the seller's discretion. Okay. From my perspective, I can lock a rate for 30 to 90 days. That's not an issue, right? As long as we determine it upfront what the closing date's going to be, we're able to lock a rate over that time period. And so that allows you to show to the seller that you're willing to work with them, right? If you want to work fast, let's work fast. If you want to give them a little extra time to get the dumpster in there and all the things moved out, that's also fine. So you want to make sure that you come off as amenable because the seller is more willing to give up maybe a couple $1,000s so that they have the flexibility to work on their own time schedule. Okay. And then finally is this concept of escalation clauses. This was a totally unheard of concept probably about 6-7 years ago. Then it got rampant and people started working away from it. And now it's coming back into vogue. So what I advise you before I even tell you what it is talk to your realtor. And then if you're bidding on a property, talk to the listing agent and see what their appetite is for an escalation clause. And basically an escalation clause is a term in a contract where you're going to bid a certain amount, okay? But you're willing to pay up to another dollar figure as long as we can verify another bid that is in between, right? So we'll use round numbers. I'll bid $300,000, but I'm willing to beat the next bid by $5,000 up to $350,000. Okay. The reason this works well for you is that maybe the $300,000 was enough to buy the property, right? And so if you just came out originally and said, "Hey, I'll bid $350,000," then you just threw $50,000 away. Okay. But if there's somebody in there at $325,000, now you bought it for $330,000. You still didn't have to go all the way up to the $350,000. Okay. Now, what I strongly suggest, always make a cap, right? So it's not indefinitely. I'm not going to bid at $5,000 over the next highest bid, because what if somebody wants to bid $2 million, right? What if somebody is coming in at just a crazy number? You never know what somebody's motivation is going to be. So always have a cap. And then you always want to have something that's material in the escalation. So I always use Mrs. Rappalucci as my example. Mrs. Rappalucci had 2 kids that grew up, and there's this beautiful tire swing in the front yard. And her sons used to go and swing on it every day. And when she got a bid, the bid had a nice, beautiful note in it that said, "I have 2 kids, and I can picture them swinging on that tire swing," and she becomes emotional about that bid, right? So she might take that bid over yours because even though it's a lower bid. Now, if you put an escalation clause in there for $200 or $300 over that one, she's willing to throw that away, right? She said $200 or $300. It's not enough to motivate me to take this tire swing away from these 2 children. But if it's $5,000, $10,000 over, so they can find another tire swing for 5 to 10,000, right? So that's what you're trying to do, is to motivate the seller to ignore a higher bid to select you because you want that property that much more than they do. Okay. So we've gone through this process. You're pre-approved. You have the property under contract. You talk to Attorney Golas. He has the title all set. I have all of your underwriting documentation. It looks great. We verified your income. We verified your assets. We verified the home with an appraisal. Everything is all done. You got to go and schedule your loan to close. Now, the last thing you're going to do right before you close, right, within a week or two you're closing, is you need to set up your homeowner's insurance. We will not schedule your loan to close if you do not have a homeowner's insurance policy in place. So we brought Blanca Escobar from Liberty Mutual, and she's going to talk about the first-time homebuyer home insurance options.
Hi, everyone. Welcome. My name is Blanca Escobar. My office is in Glastonbury. I've been with the company for over 3 years, so I'm very passionate about helping clients understand home coverage, right? So it's important that you understand what it's going to cover for your home, right? You invested a lot of time selecting the right property for your family, so you need to choose the right coverage because it can be confusing. So, so one of the things that I wanted to mention, being a Dutch Point Credit Union member, you actually get a discount. So you have a lot of member benefits. And one of those benefits is you have access to a local agent, which is me. I work with 8 different insurance companies. So we work as a one-stop and shop kind of place. So we want to get you the best coverages and the best price. We also work closely with your lender from the credit union to make sure you have all your coverages in place, your deductibles are in place, and we give you less homework because you have a lot going on and it's a very overwhelming process. So I wanted to say one of the tips that I have for you guys is besides having a 20% member discount with the credit union, you can get multi-policy discount. So it's important when you're looking to buy a home to bundle your auto insurance with your home. You're going to get the most bang for your buck. Also, you want to start a little bit early, right? So you went under contract, you look at a property, you're going right before you're going under your inspection, you want to make sure you're calling me so we can get you going with some insurance. And this will give you an early shopper discount, which is always a 5%, and it's a great discount to add on top of your other discounts. We also have first-time home buyer discount too, which is wonderful. So definitely recommend, if we're going to go through that process, I'm going to ask those questions. He said, first time you're buying a home? Yes, it is. Well, we have, great programs, and I have great carriers to offer really good discounts there too. Newly purchased home discount as well, we offer, among others, right? Besides the discounts, I know I get a lot of questions, and people usually ask me, what kind of coverage will repair the house? What about the belongings in the house? And then any other damaged structures to the property, will they be covered? So I go over every single one of those questions with you when we set up time to speak on the phone, and I make sure we take the time to fully understand, explain those coverages and what will be covered for your home and your family's belongings. And then I wanted to say one last tip that I have for you. If you are not, if you haven't owned a home before and this is the first time you're going through the process, I highly recommend getting renter's insurance. So if you're renting an apartment right now, definitely recommend you call me and set up a renter's insurance, because that's going to help you establish that relationship with the insurance. So when we move into the homeowner's insurance, will be an easier and a cheaper transaction for your home. So, and if you have any questions, obviously you can put them in the chat. And I will also leave my information if you want to contact me and have any questions regarding either renter's insurance, homeowner's insurance, and coverages. Thank you.
Thank you, Blanca. So we've gone over a ton of stuff right now. I know it's coming at you rapid fire. So I encourage anybody who has any questions to kind of put them in the chat right now. We'll go over a few of them. So one of them that jumped out at me is a great question. Isn't it true if I check my credit score, doesn't that impact my credit rating? And yes and no, right? So what a lot of people do is if you go out and you apply for multiple types of credit, right? So you go and apply for a mortgage, then you apply for a credit card, you apply for an auto loan, a home equity line, you apply for all these different inquiry types of credit. And within 3 to 6 months, nothing comes up from it. They're going to look at that as if you're searching for cash and you were unable to be approved from a lending institution, which will negatively impact your score, right? So each time you pull it, you're going to lose about a point on each pull. So if you go out and apply for a mortgage, if you apply with 27 different institutions and then don't get any new mortgages, you're probably going to end up with a ding on your credit. But if you go out and you apply for a mortgage and within 6 to 12 months, a mortgage pops on your credit report, they actually see that as a positive, right? So you went out, you applied, you got a home under contract and you were approved. And now your credit score was 726 and it will jump up to 746 because your type of credit will evolve. Your different levels of credit. So mortgage is considered a high tier credit item, which means that it's higher likelihood of denial, right? So like credit cards, they'll give most, different institutions will give pretty much anyone a credit card, but not pretty much anyone can get a mortgage. So that is actually seen as a strong item. So if you go out and apply now and you don't find anything and you apply with 1 or 2 lenders, you're going to see 1 or 2 points come off your credit score. It's not a big deal. But if you do have any sort of credit history, bankruptcy, foreclosure, that kind of stuff, and you're kind of teetering on the lower edge of your credit spectrum, you want to be careful that you don't accidentally knock yourself into sub 620 levels, because then it's going to significantly impact your ability to qualify. But a lot of people that call me, they go, hey, I got 810 credit and I don't want you to pull my credit. It's going to impact me. The mortgage rates are tiered based off your credit score. So if your credit score is over 740, you're going to get the same rates in terms if you have 741 or 810. Okay, so don't hold off on applying because you're fearful that you're going to knock down a point or two. It doesn't make any difference if you're 808 or 810. But again, if you're in that 625-ish level, be careful because you just don't want to knock yourself out of contention so that when you do find a property, you're unable to get it. But what I will say is that your credit report is good for 90 days. So once you apply, you fill out the application initially, your credit report and that application is good for 90 days. You do not then have to apply again. Most of the time, if you don't find anything within 3 months or 5 months or whatever the timeline is, we don't just continuously pull your credit. We're going to let it lapse, right? And then when you go back and you're serious about buying again, you find another home or another opportunity. If you have 800 credit, I'm not too concerned that you've damaged your credit too much. I'm probably not going to pull it even if you find a new home. If you're in that kind of dicey area where you're in the 625, 630, before you make that bid, if your credit expired, we might pull a new one at your direction to make sure that you are still approved and that everything is a go, right? Because we want to make sure that when you do get the house under contract, that we can finalize the transaction and help you buy it. Okay. And then another question was, hey, we haven't figured out a budget. I don't know how much I could spend. What would be your advice on determining that? And that's where I think it's great to just reach out to me or reach out to, start an application, because what we're going to do is we're going to put you in contact with that mortgage expert, and we're going to ask you questions that are going to determine what you can afford, quote unquote, afford. Now, what you can afford and what you're comfortable paying are not necessarily the same thing, right? So you might say, hey, Joe, I want to pay $1,100 a month if I want to buy a $500,000 home, and that math's not going to work, right? Because the taxes alone are probably going to be $1,100. But if you come in and you say, Joe, I'm comfortable paying up to $3,000, we can back into what that number would be from a mortgage perspective, and you can have that as an understanding. Now, again, that may line up with your vision and it may not, right? You might want to buy that $500,000 home and expect to pay $2,200 a month in payment. It's not going to work. But if you say, okay, now I have to adjust my vision and I have to target my search a little bit differently, that's a good conversation to have, and it allows you to kind of understand exactly what you're looking at and what you can expect. Because the last thing you want to do is put a house under contract and then get the sticker shock of the payment at the last moment when you're kind of under the gun to perform. And what I'm going to do is in the chat, I'm going to actually put all my contact information. Reach out to me, phone calls, emails, And I'll either put you in contact with one of my loan officers, or if it's a simple enough question, I'm happy to answer it myself and work as a resource for you. This is all about helping members, right? We want to make sure that everybody is taken care of, that we get your questions answered. I find that most of the time, Members Mortgage and the Dutch Point Credit Union are going to be your best option. But if you find that we're not your best option, I'll tell you that, because this is a relationship. Okay. This doesn't stop at one transaction. Most of the people that we work with will do 2, 3, 4, 5, 10 mortgages for over their lifetime. So if I don't get one of those 10, I can live with it. But I want to make sure that you understood that the information that made you successful came from the Dutch Point Credit Union and Members Mortgage Company, and that we're going to be here for the foreseeable future to make sure that we take care of all your financing needs. So with that, I'm going to turn it back over to Octavia. And again, feel free to reach out to me at any time and ask any questions that you have.
Yeah. I just want to thank you all for coming today. This has been very insightful and inspiring. The market is a little bit scary, but I think if we're well prepared, we'll be able to get the homes that we're looking for. I want to thank Blanca and David as well for being here and providing additional insight on other areas of lending. That's all I have for today. So if you have any questions, always reach out to Dutch Point. We can definitely point you in the direction. If you don't have time to jot down Joe's information, you can reach out to us here in our lending center. We have his contact information. I have the information for David and Blanca as well. So please use us as a resource. And thank you so much for your time today, and you have a good evening.
Thank you. Have a nice night.
Thank you. Bye.
Okay, thank you.